And today, probably you can tell from the behind that we take this session back to home. Well, there's no particular reason, but it really depends on my work during the day. Because recently I've been running around. Well, of course, quite busy, but then it's in a good way. So today we take back from home, but then the main purpose is like we have to start at 5 p.m. GMT sharp. I can guarantee there's no kids coming from the back door, so don't need to worry about that. If there's anything, just entertained. Lots of people are making joke of that video that kids from the back door coming in the middle of the interview. So I can guarantee there's nothing happened like to me today. Okay, so today, because it's towards the end of the 16-17 tax year, it's end of March, and then there are lots of questions raised, or even if not, there are things, people, like even very simple things, people can ignore, take for granted, things like what are the deadline, or even taking perks, or even taking dividends. So there are quite a few things that people probably take for granted, but then, today we'll focus on very simple things at this time of the year. What you are looking for, make sure you save some money for 16-17, or you get tax relief quicker, or you max out your tax-free allowance. So all these things. Of course, we'll talk a little bit about what's gonna come in the next tax year, in particular in our client base. At the moment, very famous thing that is IR35. We'll talk about a little further as well, because although we had a session before just covered that. But we'll talk a little bit about that because it's new, it's upcoming, and people are really stressed out about it. And it's very interesting that different locum doctors recruitment agency, they say different things. So we'll cover a little bit about that, as well as from beginning of April this year, the Buytolet property rule is going to change as well. So we'll just talk about very, very basic but very general thing. Just make sure we finish off this tax year nice and tidy, and you know what you're doing in next couple of months. Make sure nothing is missing out. Because quite often before, I do have people like January, they realize they have to do a tax return for the previous tax year, but then they didn't realize they need to do that. That's the thing. And some people will say, yeah, I know I need to file the tax return by the 31st of January, but when should I pay my tax? And why, when I need to do certain things. So today we just cover something about this. If it comes up boring, that's I try to make it as entertaining as possible. So actually I divided into a few parts. First of all, of course, taking perks. It's actually a very interesting part. Have you considered, have you maxed out your deductions during the 16-17? In particular for people who are looking to invest in the equipment, because they are big outgoing. Like if you are investing in the laptop, equipment, a van, like for the business, or a camera, or this kind of thing. So if you are looking to buy it like around this time, it's better buy it before the 5th of April, because it's still within the current tax year. And of course, you get the tax relief straight away. Rather than if you wait until 6th of April, then of course you'll wait until the next tax year to get the tax benefits. So if you are looking to invest in some of these things, this is mostly for the people who are self-employed. So if you are looking to invest in some of these things, make sure you do it before 5th of April. Okay, so taking perks. And the second thing, of course, the tax, allowances, one of our sessions we covered, we have £5,000 tax-free dividends. So if you just form a company very recently and haven't taken any dividends yet, make sure to do it if you have a capacity and if you have enough money to do it. So do speak to your accountant or run the figures if you are able to take £5,000 as dividends. So that's for people who hasn't taken dividends at all during the year or haven't maxed out. So make sure if you can max out that, because that's tax free. And also like your ISA allowance, like 15,240, that's 17 tax years allowance. So have you taken this opportunity? Have you invested in fully? If you can, because the interest is tax free. So all these things, of course, pension, there's a annual allowance of 40,000, but depends on what you earn. If you are like high earners, it might only be 10,000. But for this part, do speak to your financial advisor. And when it comes to pension, actually, we're gonna have a session very soon. One of our Q&A session, we're going to invite our wealth manager back. We're going to cover one session just for the pension, just focus on the pension. Because as accountant, we can probably tell that there's a certain tax relief that if you invest in pension. But in terms of this kind of investment advice, really need to speak to a wealth manager or financial advisor. If you do have an advisor like this, that's good. But in one of our upcoming sessions, we'll invite back our wealth manager and we'll just focus on this pension. Okay, so max out your allowance. And the third thing actually is very interesting part. Of course, earlier on we talked about the dividends, like 5,000 tax-free dividends. But if you already taken dividends, have you assessed like what's the likelihood of a tax liability you're gonna do? Of course, it's always a good idea. Run the numbers roughly. Speak to your accountant, or if you want to speak to me, that's fine. Really have a look if you are able to take more dividends, or just hold on to it until 6th of April. Because if you are already maxed out, not just the tax-free allowance, if you are taking more dividends, like if you are maxed out, already taken like 30,000, then do you still have the capacity of taking more? Because if up until 43,000, well, given that there's no other earnings, then a certain amount that's only taxed at 7.5%. But do you have a capacity to take more? Because one of the cases is like if you take more, every 10,000 you will end up paying 3,250 in tax. But then, whereas if you hold on to it until the 6th of April, it's a fresh new tax year, then the tax allowance will start from beginning. So the timing of a dividend, that's also make a difference as well, make a difference for tax bill. Do you want to take it now? Of course, if that's sort of a very urgent thing, or even like one of our previous sessions, we talk about director's loan. Can you play around that way? So really look into that. But ideally, of course, if you hold on to declaring dividends after 6th of April, then that's you do have more tax advantage. Do speak to your advisor. Do take professional advice on this. Okay, that's the timing of dividends. And next thing, know your responsibility. There are people I've spoken to before. They probably they started the business halfway through the year, or just perhaps in December, November, and perhaps they just have some expenses, but they actually started trading. Because even if you don't have sales for a couple of months, but if you already start doing market research, start having expenses like going to the mentoring, start buying things for your business, or start advertising, print out your marketing material, or have your website, then that counts you already started training. So really look into it. Do you really, are you really started trading by definition? And if so, of course, you will need to register self-assessment for the 16-17 tax year. Of course, it's better if as soon as you realize it, do it as soon as possible. Otherwise, and of course, your responsibility will involve filing the tax return by end of January 2018. So really know your responsibility. And if any tax payment, that's the same day. The deadline is same day, 31st of January 2018. But there are some circumstances that you might have to pay tax twice. So in terms of like self-assessment or paying tax, paying personal tax, all these things. We will cover separate session on this because it's actually quite a lot of details for certain people, like if they have to pay tax twice in a year, or how they can pay other ways instead of just paying the voluntary, like paying the amount in full. Are there any other ways you can ease out your cash flow, or in a situation that you cannot pay in full? So we're going to cover a session like that in the future as well. But the deadline, standard deadline, 31st January. Of course, the government is imposing some changes. They probably very soon, next couple of tax years, the self-assessment probably will disappear. They will be replaced by the quarterly reports, like making tax digital. So instead of reporting it yearly, then now you have to do it quarterly. It just makes sure if you are running a business, you are on top of your records. And also it's also good for business as well, always be able to track your numbers. Oh, excuse me. Because recently I having a kind of like sore throat. So yeah, but then that's nothing to worry about. Okay, so yeah, really know your responsibility. Are you really self-employed? So do speak to an advisor, or you can speak to me to find out if you have done something like related to trading or related to business. It's not say the first day you make a sale. It's not. It's the first day you have the intention to do it and you spend money on it. But of course, if you haven't done, the good thing about it is actually before you start earning anything, making any sale, you only have expenses. So of course, from your self-employed business, you only have outgoing. But what if you have a job at the same time and you pay tax on it? You can actually use a loss because it's a personal loss as well from your self-employed business. So you can use a loss to offset your other income, and the tax you paid through your salary or anything, then you can get it back. So you don't pay more tax than you should be. So that's some quick note. Actually, people actually find out like, what's the benefit of me registering self-assessment? I haven't earned anything. But if you are in sort of these kind of circumstances, then there's a benefit. You get the tax back. So why not? And of course, any expenses, we really look at claiming the expenses. So get some money back. Okay, so that's know your responsibilities. Of course, and the other note is if you have registered a company as a company director, even though your company has absolutely making nothing or making a loss, you haven't taken any salary or dividends, you still need to file the self-assessment for the fact that you are the company director. So lots of people are not aware of this, but then it just make you aware. That's also a responsibility as well. So really make it clear what's your upcoming responsibility, and then really make sure you're on track of things. So 31st of January, for most people, that's a big day. You have to file your tax return by that day and pay the tax, any tax, if any. Okay, so that's a responsibility. And the final part, of course, you will know what's going on next for the upcoming next year, because the UK government certainly knows how to keep us busy. Next tax year, I think people mostly worry about, especially most of my clients, they are locum doctors. They're mostly worried about that public sector IR35. At the moment, although we cover detailed session on that, but it seems like there are always lots of like voices, like different agency or the trust, they say different things. There are some agency, they probably just don't want to take any risks. They want to push everyone on PAYE or umbrella company. But there are some agency, they are okay with putting you through the limited company. I think for agency, they have their own perspective. But the best way, the first step to go, because government HMRC has released an online testing tool. So that's the best place to go first, to test your contract, to see if you're outside or inside the IR35. In particular, there are some people might find their work arrangement is outside IR35 anyway. But if they have agency that just want to push everyone into PAYE, push everyone losing that tax benefit of using the company. So test out yourself first. The link is shared in our Facebook group. So actually, I have an exclusive Facebook group. It's called Tax Deductible Lifestyle Tribe. Later on, I will put this name on the comment box. So if you are looking to have that test and looking for that link, either you can search online or you can go to my page. And also, I had a webinar last week, and you can watch a recording from there as well. So it's posted in the group. Any information will be shared in the group. That's a support group. So we can share, and also we have a panel of experts like our wealth manager is there. So we can always share the resources and make sure you get most of it in terms of managing your money and managing your tax bill. So watch out for that. Okay, so that IR35 thing, people still concerned about it, but then I would say from a relatively neutral perspective, go to the HMRC tool first, test yourself whether or not you're outside or inside IR35, and be free to watch my webinar recording because I've taken you through that HMRC's questions, that to make sure you fully understand them and select the correct answer and what to look out for. So the best place, perhaps I would say, just go into my Facebook group, and then we have all the resources. Or you can personally email me, and I point you to the right direction. Okay, and also from what I see, this IR35 thing, I think what the government want, of course they want to collect more money, but what's behind? Because at the same time we have for smaller companies, we have this auto enrollment, because we have the employers have responsibility to enroll their workers into the pension scheme. So it's a additional hassle for employers, but government also want to make sure there's no employer trying to avoid taking this responsibility by putting their employees into like limited company or like contractor, but they are like sort of employee in disguise. Just want to make sure all these employers, they are taking the responsibility for the proper employee. So no one is avoiding this. If you are an employee, you work for someone, you've been controlled by someone, but then that's the employer's responsibility to take care of you, and you have all the employment benefits. So, I think that's also one of the reasons what I've seen. That's why government have imposed this change. It's not. I think it's at the moment it's more linked to the employers to run the test to assess their workers. But of course, there are employers don't bother doing this. They just want to not want to take risks, and like everyone be on PAYE. But it's not always the case. So really go to the HMRC's tool to test yourself out. And finally, the other thing is a Buytolet property. In one of my YouTube video, I actually had some tips and some sort of information about what's going to change and what are the things you can do to mitigate the change. Basically from 6th of April 2017, because previously if you have a Buytolet property and you have a Buytolet mortgage, previously that mortgage interest is fully tax deductible, but then from 6th of April it's going to be restricted. So the government is taking sort of a more and more restriction in the next few tax years. And by around 2020, then we cannot deduct that mortgage interest anymore. So for most of the landlords, that's the biggest outgoing. But of course, if you're losing that sort of tax deduction, some of them might just go into negative cash flow. So it's really not a good sign. We actually have a resource. I think later on I will post in the group about the video, a demo video that we run, just for you to see what are the changes what are the estimated tax bill. Even if, perhaps for some next tax year, the restriction is not that obvious yet, there are still some changes, still some tax increase. Or thanks for the likes. There are still some changes, but then, it's good to know what are the increase, what are kind of a tax bill you are expecting to pay. So I'll post in the Facebook group, and that's a video, just a example to run, some sort of random figure to run our tax planning, and also some options like, are you able to sort of share the ownership with your spouse, that you can share the tax-free allowance or tax brackets, or are you able to put the property in the company? Because if you put in the company, then you can still use that mortgage interest as a deduction. So that can be a tax advantage. And the other thing, are you able to just sell that property, or just better off invest in commercial property? Because commercial property, you can still use that mortgage interest as a tax relief. So I'll post a video in the group, and that's an example, an illustration. But if you do have any questions, that's not a tailored replacement of tailored advice. That's only the very general information as example. But then if you do need a tailored advice, do speak to me, or speak to your accountant if they're already running for it. So do watch out for that if you have a buy-to-let property, and especially if that's currently under your individual's name. Okay, so I think that's pretty much 4 sections: taking perks, maxing out your allowances, taking dividends, know responsibility, and know the upcoming changes. So I hope you find it useful. Of course, if you have any questions around this tax year end thing, or anything that around IR 35 or buy-to-let property, so be free to let me know. And if you are interested in some more support, and also the support from our panel of experts, do subscribe our Facebook group. It's called Tax Deductible Lifestyle Tribe. Okay, so I hope you have a nice evening, and I hope I shall see you next week. Okay, so have a nice evening. Bye now.